How do we boost profitability? From Kenya to Nigeria to South Africa, we have seen inflation erode consumer purchasing power. In Nigeria, for example, inflation is about 33%. Food inflation is 40%, particularly. In Kenya, we have followed the riots of young people on the street, essentially because people have been squeezed very badly. And yet we still need to run good business, keep our old volumes, and be profitable. For some of us who are funded by investors, we have a promise to keep, to deliver on our numbers. So how do we deliver in this period when the consumer is squeezed heavily because of inflation? How do we deliver strong growth and profitability? Because our investors and our shareholders will not give us excuses in terms of how we've been funded. And Samuel, I'll start from you. You've been running this for 15 years. You've seen the economy go up and down. I'm sure you have a lot to share with us. So starting from you, Samuel.
I can speak for what we've done, not for everyone. But what we've done is simple. Over the past few years, we've seen that squeeze. Consumers have gotten squeezed. The squeeze has increased over time. I think last year we made a decision consciously to actually start thinking about how to actually have more innovation. So new product innovation in our business so that we can actually capture more consumers. And since we have physical brick-and-mortar stores, what else could we add? What we decided to do was simple. We added a restaurant, a traditional restaurant into the business, within the existing business. So we added something what you call is a traditional fast food, essentially, within the existing business. So we can sweat our asset the same way. Because we've leased those locations already. We've paid for the assets. We've done everything. How else can we get more from it? And the food business, the margins are better. The turnover is not as high as that of the supermarkets that we run, but the margins actually make up for that. And then the working capital requirements are not that great, so they are not as difficult as that of the distance. So it makes a lot of sense. And so that's what we've done for us. We've actually done some sort of product innovation, some sort of increase our offering to make it easier for us to actually be more profitable during these hard times. Of course, we've always done something which is local sourcing. We've never really sourced from outside the country. So, I mean, for most people who source outside, you need to start looking at local sourcing. That makes it easier for you to deal with this sort of thing, because local sourcing means you don't have to worry about FX problems, which is one of the big challenges you have in Nigeria. Also, on the marketing side, we've done a little bit more of brand innovation, just changing the way our store looks and feels like. We're trying to actually try to localize the store even more, so that, if you come into our store, you feel more and more like, you're in a Nigerian store, not necessarily something very different. In a way that makes it look like, oh no, okay, I could buy these things. They'll be cheap enough for me to deal with. So for us, those are the three things we've done. We'll continue to source locally. We've actually basically make some sort of product innovation to sweat our asset better and to improve our profitability. And we've done a little bit more messaging on the marketing side to actually say, look, we are more of a local business, and this is who we are. We represent you. You don't need to worry about coming to us to actually get something cheaply. This is your store. This is your local store. And that's what we've done in that sense of it.
Interesting. Innovation, diversification. I can pick up innovation, diversification in terms of moving to food business to sweat your asset.
Correct.
Real estate asset, local sourcing as the third one. And the fourth one is localization. We are one of you. We're in this community. Maybe we will have time to expand on that, because there's a lot of that might be loaded in terms of localizing. Willie, Jazza Retail is a discount chain of retail store. How are you managing to keep the volumes you had pre-inflation, especially given the kind of things we see? People are squeezed. That's why they're on the streets in Kenya. Over to you, Willie.
Key word here is one. Customers are now giving up choice for value. And so the key word here is that how do we then now demonstrate that we are the most valuable? And that means then, again, going back upstream, negotiating with suppliers heavily, because you have to now go heavily on the suppliers who they themselves can clearly see, because the more inflation is, they were banking almost similar amount, but the volumes almost double digit on decline. So as long as that is on the decline, everybody wants to still grow. That means what? The operating costs to produce way less goods and all that. So they are also struggling. So they also need to push volumes and all that, because the cost of employees is still the same. They have already made assets and all that, which are now on idle capacity. And then also for those idle capacity, what we did is also come up with our own private labels. Because why? As I said earlier, customers are giving up choice for value. So why should I pay for Harpic In Kenya shillings, it's 650 shillings for 500 ml. Yet I can get a Jazza branded one for 150 shillings and save 400 shillings and all that. And when you start noticing all these things, and you'll clearly tell that the hard discounters and all that started coming in when the market was depressed. And when you look at it, it's all about looking at something close to, for example, what Beam is doing in Turkey. It's looking at what Aldi and Lidl started off way up there, or what Walmart is doing with the bodegas, or in South Africa, how we can see the Boxer model is more profitable than Pick n Pay itself from the last books that we actually saw. In fact, Pick n Pay was in the negatives. That's telling you, go, wait a minute. Customers do not really need the nice styles that have come from Turkey to do. All they need is Blue Band or Aereo at the right price. They need to buy a can of Guinness for the weekend at the lower price, not necessarily because you have those fancy lights and all that. At the end of the day, it's all about that cost efficiency. And it comes in back again while you have to look at the people and the people cost. Think of having a manager and then having an assistant. The assistant manager has a supervisor. Come on, man. No, it's all about saying now things are not the way they are. I'm not going to let you go, but you have to take more responsibility and more rules. That means a branch manager can also be doing the receiving work. The supervisor is also doing the cashiering work. The cashier is also doing the offloading, because ultimately now it's all about managing the OPEX bit about the whole business. But more importantly, we are not doing this alone. We have suppliers behind saying, guess what? They also have to participate in that particular pain point. If it means bulk buying, then let's bulk buy and order properly and actually get that. If it means us paying promptly and now organizing the prompt payments so that you don't have an issue of inflation and all that. So changing and lowering the days within which you're supposed to be for payables starts making all that bit. So there is quite a lot. And especially, of course, in Kenya, it's a young generation who are demanding and saying, we don't really care. No, we want jobs and we want new products and the government can go hang. All that comes back to the customer. There's the same customers coming to shop and they're like, no, why is this more expensive than I can see Carrefour has come and has a promotion for this weekend. You have not shown us a promotion for whatever. And then that's how we start localizing and start coming up, because we are better than the other brands that have actually come up, because we know the local markets better. So we need to actually adjust to that. Thank you very much.
Thank you, Willie. A lot of very key things there to note: the trade-off of choice and value for the consumer. That probably may even have implications in terms of the merchandising. I mean, what we put in terms of how we manage our inventory, what is put on the shelves, negotiating with suppliers in terms of partnership, bulk buying, ensuring that you get value, which you pass on to customers. Private labels, that's actually very interesting. Private labels are things which are more popular in more advanced retail markets. It's very interesting to hear that beyond South Africa, which has a very much more European, sometimes type of retail, we're hearing private label model in Kenya. That's very interesting. Maybe something for some of our other regions to consider. Something very important that Willie also mentioned is, those of us who know South Africa, Pick n Pay versus Boxers. What kind of retail store what kind of retail chain do you want to run? The very sophisticated, modern, or the real discount store that is talking to the people? Maybe we are seeing the same kind of trend. Maybe someone can tell us more about that, between the big ShopRites, which is serving a certain market, this past, and of course, the other type of emerging retail that I imagine the CMAs, the grocery bazaars, serving another set of markets in Nigeria. And you also mentioned something very interesting: streamlining people cost so that you are efficient in terms of your retail.